Mahesh Nandurkar, who is the India strategist at Jefferies, joins us now to talk more about the market and, of course, the way forward as well. Mahesh, thank you so much for joining us. And, season's greetings to you, your entire team at Jefferies. It's been a rollicking year for the market, right, so far. Do you think we have it in us to build on to these gains ahead of a big election year? And how are you positioned now in the index?
Hi, thank you for having me here. The market has had an excellent 2023 for sure. But I don't see any reason to be excessively pessimistic here, because if you look at several global factors as well as a lot of domestic factors, a lot of positivity around those factors, I would say. And I would say that yes, I mean there could be some minor pullbacks here and there, which cannot be ruled out. But if you take a view from the next 12 months or next 24 months, my sense is that we are in for a strong double-digit returns from the markets. Obviously, the composition of what goes up and what goes down will probably be slightly different. My key thesis is that what has necessarily worked in the last, say, 5 or 10 years, I'm talking about a slightly longer time frame, will not necessarily work in the next 5 or 10 years, but a lot of opportunities for long-term investors to take bets here and to profit out of it.
What are you hearing from foreigners, Mahesh? That's the big cohort which has stayed out. The market's gotten to where it has gotten without very much help from them.
Absolutely.
So far. Are they going to come back in a big way? What are you hearing?
Yeah, I think so, because right now what we're clearly seeing is that India is beginning to show up a lot on the on the radar of a lot of global investors, not just the typical Asian market investor or emerging market investors, but a lot of investors with global mandates. And rightfully so, because I think in about 3 years' time, India will be the third largest GDP. We're already the fourth or the fifth largest market by the market cap terms. But clearly, if you look at some of the global indices, India's neutral weight is still below as compared to where it should be. But given the changes that are happening globally, especially the Chinese markets is no longer in a big favor at this point in time. And my sense is that you will see more inflows from the foreign investors as well. It's just that a lot of foreign investors are staying out at this point in time on the valuation concerns. But we have seen this several times in the past as well, and I think something similar will happen over the next 12 to 24 months. That concerns about the valuations will slowly begin to be absorbed by the foreign investors as well. That's clearly the sense that we are getting.
All right, Mahesh, good to see you in our studio. Mahesh, one theme that has really played out is the PSU space. And you all have been positive on a couple of names out there. Coal India, NTPC. Now we're looking at the PSU basket and saying the market capitalization is 50 lakh crore. It has valuation support as well, if that is a parameter. Do you think it has more legs from here on? Last 18 months belong to some of these PSU names. The next 18 months as well, will they continue to remain the leaders?
Several PSU stocks are actually looking very reasonably valued, as you rightly said. And the market and the investors will be focusing on that part, the valuation part, much more. See, again, I'm taking a slightly longer term view. I mean, over the last 5 to 10 years, the way to make money in the market was ignore valuations and just stick with quality, just stick with predictability, and then you end up making money. But I think that has clearly changed given the fact that India's capex story is unfolding, and clearly we are in a period where a lot of small and mid caps are actually outgrowing their larger peers by a wide margin, and clearly the focus has come on the valuation side. So come back to answer your question on the PSUs. I think a lot of these stocks are trading at attractive valuations, be it on the power side, utility side, power financiers, coal mining, and even some of the banking stocks as well. So I see plethora of opportunities in the PSU space.
Okay, plethora of opportunities in the PSU space. Your view echoes the sentiment that many experts have had in the recent past as well. We were speaking with Sridhar Shivaram a couple of days ago, and he said the best way to do it, perhaps, if you're struggling to find stocks, is go through some of the PSU mutual funds, right? There are a couple of good ones out there as well. All right. You have a very high conviction in the capex plays, and in the broader market, some of the stocks that you've liked are names like Polycab, KEI, Kajaria Ceramics, Thermax. These are, of course, great names, but the rally has also been stupendous here. If someone has missed out on this theme entirely, is there still more scope?
Definitely. And I'll just give you my personal example here. I used to be a consumer staples analyst about 12, 15 years ago. And most of the stocks in that space used to trade at 20 times P multiple, some of the large cap names. And when I would pitch those stocks to several investors, they would say 20 times P multiple for a company that is growing its earnings by 12, 13%, I'm not paying that much. And what has happened over the last 10 years is that 20 became 30, 40, 50, 60, 70, right? So the definition of what is cheap and what is expensive has changed materially over the last 10 to 15 years. And that does happen when some of the key themes emerge. So as I said, last 10 years, the theme was stick to quality, stick to predictability, ignore valuations, and those stocks have really risen from 20 times to 70 times. Some of the names on the capex side that you mentioned have got re-rated already. And because we have this tendency of comparing everything with what has happened in the last 5 years, and you'll see, oh, these stocks are trading well above their last 5-year averages. But I think the market will come to terms with it, in my view. And given the strong earnings growth that many of these companies will be delivering over the next several years, and even if there is no further re-rating, the earnings growth alone should drive 15-20% plus returns from here on in many of these stocks.
In large part, it's also a function of just too much money, right, coming into equities as an asset class. I mean, isn't that a big part of it?
It is, absolutely. So you cannot really ignore that. And as you rightly mentioned in the beginning, most of the market rally or movement that we've seen so far has been driven by domestic investors, and foreign investors have largely stayed out. But I think the sense that we get is a lot of investors have also been on the sidelines, as I said, one, because of valuations, and secondly, also because of upcoming the political events. And there is some element of uncertainty in the minds of a lot of global investors that have not participated in India so far. So while the consensus is pointing towards one thing, but many global investors still want to take a bit of a pause. But I think, as I said, both these
still pause because of the political
uncertainties, and they want to have kind of see the final outcome.
So these are based on what you're telling us is this is based on the conversations after the election results. I mean, after,
before, generally over a period of time.
There's a big difference, Mahesh, right? I mean, before that weekend and after that weekend, because of the results that we got.
No, that's why the market moved up the way it did.
Yeah.
But it's not necessarily that the same global investors that we are talking about we have seen some flows coming in, but I think still I see that there are a lot of foreign money sitting on the sidelines. And so therefore I mentioned that while there could be some pullbacks, but those pullbacks will be short-lived because there's a lot of foreign money waiting on the sidelines. So those dips will get bought into.
Well, Mahesh, China +1, Russia +1, India is gaining. In a few years, I think we'll be saying India is the only one. That will be pretty good for us as well. And we've discussed a few themes actually in this conversation. But, and on select themes, well, some are bulls, some are bears. But the one that you all have been quite bullish on, which has not been really a consensus call, has been Honasa or Mamaearth. And kudos to your analysts as well. Came out with a note when I think the stock was down 15 or 20%, if I remember correctly. Some of these names, do you still believe, even at these valuations, there's plenty of value still remaining on the table?
Yeah, so, as I said, I cannot comment on specific stocks, but I definitely believe that there is, a lot of opportunities in many stocks. I mean, I think banking sector is one name which has lagged quite a lot over the last, 1.5 years. We see value there. We discussed PSU stocks already. I think there are a lot of names on the capex space that we like, and despite the re-rating that we've seen, can see meaningful upside even from here on. I would say the same thing about real estate side as well. Consumer side, I believe that one will have to be really, really selective.
Okay.
And, one cannot just stay overweight on the broader consumption basket of stocks and expect to outperform. I don't think that's likely in my view. So one will need to be very, very selective, in that space.
Okay. All right. I have 2 little kids at home, so I know about the brand, but the valuations, I think your analysts are best placed on that one. Just one quick word on the banking space. If they're going to do well from here on, and given the kind of part re-rating we have seen in PSU names, what would your preference be, private or public sector banks at current reckoning?
I think even the private sector banks are now looking very attractive on valuation.
Okay.
So some of the large cap banks, I would say the large cap banks, or I would say, broadly speaking, the banking sector as a whole
Yes.
is the only sector which is trading below its historical averages, and including some of the large cap names, which I think can be great compounding stories. Yes, some of the PSU banks can be outperformers, some of the smaller private banks can be outperformers, but even the large private banks, I think, will be very strong compounding stories from here on.
Okay.
One of the areas you've been very bullish on is real estate, Mahesh, right? For a long time. Are you still gung-ho?
Oh, absolutely. Absolutely, for sure. I think we are in the third year of the property market upcycle, and I think it's a cycle that will last for 8 to 10 years. So we have a long runway for the property stocks to deliver.
And stocks are capturing how much? I mean, like 3 years out or 4 years out, what are they capturing? As broadly, I mean, some of the leaders which have done well. How much is in the price is the question? Or you think there's a lot of money to be made here?
I think you will probably see surprises coming up on the volume growth side and broadly the earnings growth side as well. And one of the big misconceptions about the real estate sector is that because of the accounting policies that they follow, the stocks move on the back of pre-sales, but by the time those pre-sales reflect in the revenues and and earnings, it's like 4 years out, because the developers follow this project completion method. So recognize revenues and profits when the projects are completed and handed over. That's like 4-5 years down the line. So seemingly the stocks appear expensive if you look at near-term P multiple or EV by EBITDA multiple, but actually they are not.
Okay.
So I think, strong runway ahead for the next 3 to 4 years.
I just have to ask you about this one sector. So I'm really excited about this whole green energy transition, right? I don't know if you share my excitement, but I mean, just look at that. Adani Group, for example, is investing $100 billion in this green energy transition. And so many renewable energy stocks, whether it's Tata Power, Inox Wind, all GSW Energy, all doing well. But for someone who is still looking to partake in this move, is it worth their while?
I think green energy, and I would say in the same breath, the traditional energy as well. Because what we are seeing is that the power sector as a whole is a space that the economy or the country as a whole has underinvested in the last 4-5 years. And we are looking at the power sector utilization rates moving beyond 80%, something that we've never ever seen in the history of the power sector. So there is going to be strong returns in the traditional energy side as well as the green side as well, I believe.
All right, Mahesh, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here.
Thank you very much for having me here. Thank you, Prashant. Thank you.